It's 2024 now, and welcome back. In our first video of the new year, let's review the Australian housing market trends in December 2023, the economic directions, US economic indicators, and Federal Reserve movements. This video will help you lay the foundation of buying and selling properties in Australia this year. So how did the Australian housing market perform in the last month of 2023? Why are Melbourne and Sydney markets on the verge of decline? When will the Australian housing market rebound, and what will trigger this rebound? I just returned from a long trip, and my goal for 2024 is to achieve travel freedom and balance my time. The company aims to help 100 more Vision members improve their financial situations and prepare for the property market boom at the end of 2024. Hi there, my name is Alex. Welcome to Oz Property Strategy, where I share information about real estate investment, economic trends, and wealth creation. If you like this video, smash the subscribe button and turn on the notification bell to watch new weekly videos. Without further ado, let's get into it. Let's get straight to the point. In December 2023, the market actually went the way we predicted in the previous videos. The overall Australian housing market continued its upward trend, but the pace has noticeably slowed down, from a national housing price increase of 0.6% in November to a rise of 0.4% in December. I always clarify this to ensure understanding among new channel fans. The overall Australian housing market includes all cities, regions, and types of properties averaged out to show the trend, but it doesn't represent every individual property. Beneath the overall trend, there are smaller trends, such as those of different states and territories, cities, suburbs, and property types, such as standalone houses, townhouses, apartments, new houses, and old houses in different cities. If someone tells you that Australian housing prices are rising, showing you the overall market, but the property they're offering is dropping in price, and you believe that all properties are increasing in value, then that's your problem. Let me put it this way. Australian real estate agents are full of tricks. Just like checking the exchange rate online before exchanging money, please check with Oz Property Strategy for market analysis and accurate information before you buy a property. The overall growth of Australian housing market in 2023 was 8.1%. This figure was minus 4.9% in 2022 and 24.5% in 2021. So if someone tells you that Australian real estate prices have always been rising, they're misleading you. My summary of the Australian housing market is short-term fluctuations and long-term rise. Moreover, the recent market cycles have been getting shorter. For example, the cycle was generally 5 to 7 years a decade ago, but it's been 2 to 3 years in recent years. After looking at the national trend, let's look at the situation in each city. Sydney's prices increased by 0.2% in December, an increase in the 11th month after 12 months of decline. The Sydney market was flat as the monthly price of changes were hovering around plus minus 0.5%. Melbourne's trend is even more evident, with an accelerated decline in housing prices of 0.3% in December. Perth led the way in Australia in December, with a monthly price increase of 1.5%, but the speed of increase has started to decline, down 0.4% from November. Brisbane followed closely with a 1% increase in December, and its growth rate is also declining. Overall, the housing markets in most states and territories in the country are still rising, but slowly, and some cities are already showing a trend of falling prices. Looking at the rolling 90-day trend, Sydney and Melbourne are about to enter a housing price downturn cycle, while the other major cities are also showing a slowdown in growth rate, but they're still in an upward cycle. There is an uncertainty in forming trends, which is that December and January can only be counted as 1 month combined. This is because the housing market rests in the last 2 weeks of December and first 2 weeks of January. It is also a transition period for ending the annual trend of the housing market and starting a new year, so its importance is not as high as other months. Generally speaking, the Australian housing market officially starts after Australia Day and for the Chinese community after Spring Festival. In July, everyone is on holiday overseas, so the housing market is also resting. The high seasons of the housing market are in March, April, May, and September, October, November. Summarizing the national rent trend in a few words, except for Canberra and Hobart, house and apartment rents were rising in December. Nationwide rent in 2023 increased by 8.3%, 9.5% in 2022, and 9.6% in 2021. The fundamentals of the Australian economy are still very strong. Not only has inflation decreased, but the unemployment rate has also increased. Why is this a good thing? First, my biggest concern was that the Black Friday shopping season would push up the CPI, but that didn't happen. In November, Australia's inflation rate fell to 4.3%, down from 4.9% in October and 5.6% in September. This achievement in combating inflation is really something. Now, Australians have adopted a habit of not buying unless there is a discount, which means prices can't rise too much, naturally reducing inflationary pressures. What's the cause? It's the high mortgage interest rates, leaving people with very little disposable income, making them think twice before purchasing. In November, the items with the highest year-on-year increase in the CPI were tobacco, rising by 10.5%, electricity prices by 10.7%, gas by 12.9%, and insurance by 8.8%. The rise in prices of these necessities is the most concerning because no matter the price, people still need to spend on them. For discretionary consumer goods, the kind of spending that can be avoided, naturally people will save whenever they can. Another piece of good news in November was the rise in Australia's unemployment rate to 3.9% year-on-year, a significant increase from the previous month's 3.6%. Saying that a high unemployment rate is a good thing might invite criticism. It's not good news for those who are unemployed, and they deserve attention and support. However, a high unemployment rate in the economic sphere signifies lower economic volatility, lower output, and less need for labor. Unhappy, unemployed people mean reduced societal satisfaction. This is one of the important bases for the Reserve Bank of Australia's interest rate decisions. As long as the unemployment rate rises, the central bank's motivation to lower interest rates to stimulate the economy increases. Coupled with the decline in inflation in November, at least the possibility of a rate hike has become very slim. Another potential factor that influences the direction of Australian interest rates, often overlooked, is the economic trends in the United States, especially the anticipated interest rate decisions of the Federal Reserve. Central banks of major countries outside the US, especially those with high GDP output, including the European Central Bank, all have to act in response to the Federal Reserve. The main reason is the global reserve currency status of the US dollar, where the quantity of dollars issued and the interest rates affect the global economy. The recent economic indicators from the US are also impressive. In December, the US CPI slightly rebounded year-on-year, reaching 3.4%. The month-on-month rate also rose, reaching 0.3%. Many people start to worry when they see this. They think the CPI is bouncing back and wonder if the Fed will have to raise interest rates again. But you are just seeing the surface. CPI data is collected from consumers and reflects the prices consumers pay. It includes items with large fluctuations due to seasonal changes and unexpected events such as food and energy prices. The prices of electricity, oil, vegetables, and meat tend to fluctuate significantly. Thus, they have a clear impact on the CPI, making it an inclusive but not necessarily accurate indicator of real conditions. Core CPI, which excludes food and energy, reflects the prices of most goods and services measured by the CPI, making it more stable and accurate. The core CPI in the US in December slightly decreased from 4% in November to 3.9%. Understanding core CPI is a basic step in understanding economics. However, the Fed interest rate decision do not refer to the CPI or the core CPI, but directly to another indicator, core PCE. The Personal Consumption Expenditures Price Index. This standard for measuring inflation differs from the core CPI. Core CPI reflects fluctuations in the prices of goods and services after removing volatile items, and the data is collected from the consumer end. The items in the calculation change annually, and if consumer habits change, such as dining at fancy restaurants when they have some money and at budget ones when they don't, the CPI won't reflect this in a timely manner. Core PCE, like core CPI, also reflects fluctuations in goods and services prices after removing volatile items, but the data is collected from businesses, making it more accurate and objective. It reflects where the consumers actually spend their money and how much they spend, regardless of their consumption habits. The Fed's interest rate decisions are based on the core PCE, not the CPI that we and the media pay more attention to. But why does everyone listen to the media talking about CPI? Well, that's because it fluctuates more, creating news effects. In fact, when the Fed talks about reducing inflation to below 2%, they refer to the core PCE. In November, the core PCE in the US fell year-on-year to 3.15%, maintaining a downward trend. So media hype about CPI rising and Fed possibly delaying rate cuts can be largely ignored. The general expectation in the US market is that the Fed will start cutting rates between March and June. The data for the Australian housing market in January 2024 will be released in early February. at which time Oz Property Strategy will have the first live webinar of 2024. Although the webinar is in Chinese, I'll see if I can organize an English version. So please give a like and subscribe to this channel. If you made it this far, please give me a thumbs up, subscribe, and share this with your friends. Turn on the notification bell to watch new weekly videos. Have a good one. Bye.